Hey everyone, this is Dan with Data Trend. Today is Wednesday, February 3rd, 2016. It's about 2:15 p.m. or so Mountain Time. The market closed 15 minutes ago. What we're looking at right now is a daily chart of the Russell 2000, and I just want to point out that we're seeing a lot of range in here. So the daily bars are pretty big. The average true range over the past 5 days is up around 25 points, and that's actually in excess of the daily one-day standard deviation move, which is around 16 points or so. So what we're seeing really is just a lot of movement. There's not a lot of direction, but there's a lot of movement right now. And since we got involved in this March CIB back on January 20th, the market's gone all the way down to, let's call that 958 and up to 1037 or so. So the range on that is close to 80 points, and with the market at around 1,000 or so, that represents almost an 8% range over the life of this trade. And today we saw sort of the same thing. The market opened around 1,009, and then it traded all the way down to 989 and ended the day essentially unchanged. We were up here one point or so in the rut. And the range here again was 1017 all the way down to 989, so 27-point range today. And we're just seeing a lot of movement, and it's one of those markets where we have to be careful not to get shaken out of the trades. Today was a really good example because we came right down to the point in this position where we would have been taking off the upper butterfly just to cut the downside risk. And we came right into that kind of 990-ish area that I've been watching. And I said, if we get down into that 990-ish area, we're going to talk about taking off that upper butterfly. But we were just there really briefly, and then the market quickly rebounded from there, and we never quite came back down there. So for the time being, we're still in the three butterflies, and we'll look at that position in just a moment. Dropping down here, we're on the 65-minute time frame. We're still okay. This again here is an alert in the system at that 988 level or so. We did break through this 995 level that we've been watching, and so the market now has really made a lower low on the 65-minute time frame. We're kind of chopping about. The 5-day moving average is above the 10-day. It just seems like there's a lot of indecision in here right now, but my bias is sort of a little bit bearish more than it is bullish just because of the environment that we're in. I don't know if we're headed lower. You don't know if we're headed lower. Nobody really does, but we'll just have to wait and see. If we break below this 990-ish level, we're likely to come down to that 985, and then if we fall through there, it's fair game to come down here and test this low down around 960-ish, 958. So we'll just have to see how it plays out. For the time being, we're still being held within this range from about 985 up to 1035 or so, and that's good. Our expiration break-evens on the trade, one is up here around 1045, and the lower side of the position is down around 955. So let's hop over and look at the trade. So this is in IWM right now. Let me just switch it over to RUT so we get the right prices. So yesterday we closed at around 1008 in the Russell. Today we closed around 1010, so just a tiny bit higher, so essentially on trade. But earlier in the day we were all the way down here trading 988, 990. And this is kind of the point in the trade where we would have needed to make an adjustment, or an adjustment was possible. And what I was kind of looking for is to see the market break through this 990-ish level and hold. And if it did hold that level and seemed like it wanted to head lower, maybe down into 985 or so, what I was going to do is take off this upper 1020 butterfly. The market came down to that 990 level. If we hop over here, this is a 5-minute chart of the market. So we saw the market came right down to this 990 level. It pushed right down through. We were there for just a couple of minutes, and from there we made this move higher, back up to this level around 1005. We pulled back a little bit, didn't quite get down to that 990, and then we pushed higher into the close. So we didn't quite trigger that adjustment, but we were right there knocking on the door of it. And for the time being, the position lives another day without an adjustment, and that's always a good thing. Right now, the delta is 0.22 at the close, gamma is negative 26, theta is 26.95, vega is negative 89, and the open profit on the position is 145 and some change, it looks like. So we're in a good position right now. I mean, this is a very healthy place to be. If we can continue to live kind of in this, let's say 1000, 1005-ish, from there up to about the 1040 level, that'd be great. If we could hang out in this range from 1000 to 1040 for a little while, the position will start to come up money. And then we'll have some options for reducing the risk by knocking in some of these long puts or something of that nature. But for the time being, we're just going to let this play out and see how it goes. The market is moving a lot, so there could be an intraday adjustment if we get back down and break below that 990 level. Breaking back up and above this 1045-ish, I think, is less likely at this point, but anything's possible right now. We're not predicting, we're just reacting. So that's all I have for today. I hope it helps. If you have any questions, feel free to shoot me an email. My name's Dan, info@thetatrend.com. Thanks for watching.